Hi, I'm Peter Rose, founder of Longwood Currency Trading. I just made $3,400 on an NFP price action whip. It was thrilling. I did it in two parts. I made about $3,000 just prior to the NFP release on a trade that I had figured to set up the day before, and had my limit orders in, and boom, they went through like shit through a goose. And then the NFP came out. I was on there on the trigger. I can't believe how quickly the price changed on this particular NFP. The previous one value was, I think, 189 or 199 or something like that. They were projecting 188 or 180 something, and it came in at 215. Phew! Price, I was trading pound dollar, and price dropped like shit through a goose. The 50 pip pin bar down followed over the next 2 hours by 160 pip rise. And as I'm recording this video now, early January, first Friday of January of 2024, it's still going. That's how the NFPs or any of the major are concerning for most traders. Now, the price trade that I had set up was such that if price had gone against me in the wrong direction, my trade wouldn't have hit, and I'd have been fine. I mean, I was up. I knew when the NFP was going to be, and I was up, and I was ready for it, and I was watching that, so I would have been okay on that. It triggered off. This was an hour before NFP. People were, well, establishing their positions. I think a lot of this stuff is retail traders, not so much the institutional traders. They tend to wait until things settle down and then step in and continue with their economic order flow that they need to fulfill. And that sort of gets in the way of the retail trader, who 50% are on the wrong side of it, and they start bailing out, and that causes the whiplash. I think that if you want to trade these types of reports, you have to be very careful. Now, there's a lot of traders that say, "Oh, you don't trade the NFPs. Don't just step off and step off on the side." Well, these are retail traders that are talking and saying this. And yet in the same breath, they say, well, we don't have enough volatility here to make trades. You know, it's just a flat line, and so we can't trade. So what you're saying is that you need volatility. So when you have the opportunity to have this massive volatility, you're going to stand on the sideline? I don't get that. I'll trade those events, but I have to be very, very careful. This one caught me by surprise. When I had my finger on the button ready to go. I felt that price would go down, but I wasn't sure. So I had it straddled on the sell buy button, and I was ready to go either way. Price opened and started to go down. It went down, oh, I don't know, 15 pips slowly right before the announcement came out, and I thought, oh, this is going to go, but I'm going to wait and make sure that I'm going to wait until the number comes up on my screen. Now, I know there's a lag in the reporting, so I'm probably going to be 5 or 10 seconds out. That 10 seconds, when that number hit, price went about 30 pips, just like that. So I'm on the sell button, bang, 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 bang. You know, I'm in there for 4 lots. I'm sorry, I'm in there for 12 lots, 3 lots a pop. And the thing is just going like shit, like I said, like shit through a goose. And then all of a sudden it stops, and there's a brief retracement. Boom! I close off. I made about $600, something like that. And then it chattered there for a while, and then it turned around and it started to drop again. I thought, well, I'll go in for 3. So I hit the sell for 3. It keeps on going. I hit the sell for 3 again. The thing reversed on me and went back up, and I closed out. And I ended up, I think, $350 because I gained like $550 or something like that, and then I lost on that last trade $150 or $200 or whatever it was. So I ended up in the actual NFP about $400. And that's rare, because generally you can get in as you see that momentum and that volatility start to go. You can go in and bang away at that, and that will carry down through. It's just that it went so far so fast. I mean, it just went, I haven't ever seen it move that fast before. I've been looking at this stuff since 2007. It really ripped. It was a ripper. Interestingly, it didn't reverse and come back around until, it was 15 or 20 minutes that it just kind of wandered back up. Now, when you get a price movement like that, 50% of the people are wrong. And so you would expect that it would go up to that point very, very rapidly as people were unscrambling and getting out of their positions. That wasn't the case. It just kind of sort of wandered up, and then all of a sudden, it was like going into warp drive, and it just kept on going for an hour. I don't know why that happened or whatever it was. I'm just standing on the side. If I would have been paying attention, I might have caught the updraft on that whip, but I was busy responding to emails. I mean, the issue with day trading is you have to work very carefully at your analysis, your entry analysis. I mean, if you don't get the entry right, then there's no hope for you. So you have to work very hard at that entry analysis in order to develop the conditions where you would enter a trade. So you enter it, you grab your 10 or 20 pips or whatever it's going to be for the day, you close it down, you're done. Because once you try to go in again, you didn't do all that research. What you're betting on is that price is going to continue in that direction. Now, if you traded and you got out with a 5-pip profit or an 8-pip profit or something like that, it turns and reverses and goes against you, and then you exit at 5 or 8 pips, and then it turns back around and goes back up. You might re-enter, and I do this all the time, re-enter and catch the next 5 or 10 pips as it goes up. However, when you're looking at a trade that has gone to achieve your your established profit target. Maybe you didn't stay on the ride all the way to the profit target because it maybe chattered a little bit or whatever, but you get out and you're close to your profit target. You make 10, 12, 15 pips, whatever it is you're gonna do, and then price comes back and then it turns around and continues to go up. That's a very suspect price movement. Why did it stop where it stopped and chatter and come back a little bit on a small retracement, or even a minor, small and minor. Minor's a little bit larger. A retracement. Why did it do that? Why did it just keep going? What was the problem? Why didn't a normal retracement happen? And then you're going to jump back in there where your analysis said that, I got a potential at 20 pips or at 15 or 30 or whatever it is that you're looking for as a day trader. why would you go back in then? You have to be very careful about going back in. This is normal price action, not this whiplash stuff that you have during non-farm payroll. More often than not, when you try to re-enter under different conditions, and this is stuff that I go over in my coursework or when I'm doing consulting and working with somebody, part of your rules are based around when you make these decisions to re-enter. But more often than not, it's not a real good idea, because you're going to go in three lots, and it goes up in your favor a little bit, and you're 2 pips up, so you're, I don't know, $60, $100 up, and then it spins around and it goes back against you, and you're down 20, or you're down 2 pips or 3 pips, and you say, well, it'll turn around and go back, and then it goes, and you're out 12 pips on your 3-lot position, and you're, a couple hundred bucks gone, or if you've added to the position, and then you end up losing. It's very hard when you build up a confidence in your analysis of where that price is going to change that and say, oh, it went as far as it's going to go, and now there's going to be a retracement. I don't know how far that retracement is going to go, but I'm not going to have that retracement turn around and go back in the direction that I had planned it to go in, because I'm not sure that that's sustainable. Otherwise, why didn't I set my initial profit target up there? I did my analysis. So you have to be very, very careful when you are working in normal trading environments. And then to take that and try to go into trading a non-farm payroll type event is very dicey, because all of that analysis is out the window. It's gone, because now you're in scalping. You don't try to do 10 or 20 pip. You're not setting up limit orders and putting stops in place when you're trading non-farm payroll. You've got to have your finger on the button, and your trading platform better have a close all button so that you can get out immediately. Because when that price goes, it's going to go like crazy, and when it stops and reverses, holy crap, get out of the town, because it will go severely against you. So you have to be very, very, very careful. And the mindset of trading normally, whatever that is, versus trading in a non-farm payroll, you have to have a lot of experience to be able to turn the switch on your brain and say, I'm going to go into a whiplash condition here, and I have to be prepared and set my trading process up to be successable under whiplash conditions, I guess is what I'm saying. Anyway, I had a good time, made $3,800 or $400, whatever, I don't know what I made, but I'm done trading for the day, having a cup of coffee, and my wife tells me I need to go out and find my snowshoes and all the accoutrements and gear that go with that, because we're supposed to get 6 inches of snow in a couple of days, and she wants me prepared to go out because we're going to have to walk the dog in the snow. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.